As investors are anticipating a slew of economic data this week. Top of mind, though, that August jobs report due out on Friday. That could be a key determining factor for how deeply the Fed could cut interest rates at its meeting this month. And this comes amid that worst month of the year for stocks. So here to weigh in on how investors can prepare, we've got Victoria Fernandez, Chief Market Strategist at Crossmark Global Investments. Victoria, it's great to have you on here. So talk to me about how you are thinking about the month of September in the context of a month where we've got the Fed meeting and we are, as of today, 9 weeks away from the election. Is this September going to be different than those other bad ones we've seen before, or more of the same?
We always like to say it's different this time, don't we? But I'm not so sure that it actually is. I think we will see continued volatility during the month of September for many of the reasons that y'all have been talking about. We have the election coming up. We have a Fed meeting that's coming up. We just finished earnings season. There's anticipation as to what earnings are going to look like going forward. We have a consumer that's pulling back. So there's a lot of different elements at play here that I think could cause the volatility to continue.
And so if there was continued volatility, and great to have you here in studio with us, Victoria, if there was continued volatility, where are some of the areas within that kind of dip buying mentality that's really starting to push investor sentiment as of right now? Where are those areas that you would be apt to hop into?
Well, I think you want to look at areas that typically do well in uncertain times, right? So you're looking at things like staples, you're looking at things like healthcare. These sectors have actually done pretty well as of late. They're sectors we've been adding to this whole year, but trimming those tech names in order to have the cash available to do that. Hopefully people have been trimming from the beginning of the year, taking some gains off the table. We've seen some of the breadth in the market that a lot of people were happy about, but it was coming in the small caps. I would be a little cautious here. The market does not like uncertainty, as you said a moment ago. Small caps really don't like uncertainty, and I'm not sure that 25 basis points is going to turn around the story for small caps. And we think we only get 2 cuts this year, not the 4 that are priced in. So I would be a little hesitant on small caps. Look in some of those more defensive areas.
What would it take for us to get a 50 basis point cut at that February meeting? How bad does the news have to be on Friday for us to get that?
Yeah, it's a high hurdle that you have to have, and it would have to be some pretty negative news to come in. I don't think anyone's really expecting to have the jobs numbers come in that poorly. If they do, then the Fed still has a little bit of time. And don't forget, we have CPI next week as well. Sure. So if we had a large jump in CPI, again, I don't think we're expecting big surprise moves. But if so, then the Fed, I think, might consider a 50 basis point cut. But I still don't think that's going to be their base case. I think they want to stick to 25, start slow, because all along, what has the Fed been saying? They don't want to move too quickly because they don't want to stoke the fires of inflation that could still be there. There are some sticky components. You don't want to get that demand going so quickly that those numbers start to move higher.
Well, that would spell out that you also have to have a consumer that's continuing to push back on price, which is bringing inflation down even further from this point to get closer to the Fed's target. What are some of the most consumer sensitive areas of the market right now that investors should be paying close attention to as they are trying to navigate what is a consumer that is what we've heard as battle weary or battle tested, or trading into places like Walmart, as John David Rainey, the CFO over there, told us?
Yeah, so retail is actually an excellent area, right, to look and see what the consumer is doing. Walmart is a perfect story on that. The thing I think people need to realize is you look at Walmart's numbers. Is Walmart doing better because the consumer is out there spending more and excited to spend more, or is Walmart doing better because their base grew because they had to bring in normally higher income earners that shop other places are now coming into Walmart? Walmart's numbers are better because they're 30% grocery, and the largest benefactor of food stamps usage actually turned up. It's been down for almost a year and a half. It's now turning higher. So is Walmart doing better because the consumer is not doing better and they are all flocking there? I think that's part of the story. You kind of see the dichotomy between lower and middle income consumers and higher income consumers in retail earnings. So I think that's a good place to look. And watch the wage numbers, watch the savings number. Savings has dropped to a 16-year low last month. That's telling us that even though consumers continue to spend, it's not from higher wages. They're pulling out of savings, and we have to be concerned about that.
So are we still on track for that soft landing, or are there some things in there that are looking a little tough?
I have always been a little doubtful of the soft landing. So, maybe I'm the Debbie Downer of the party that's here, which I don't want to be. But you look at some of the elements we talked about, small caps, only 40% of those companies over the last 12 months have actually made a profit. We look at the labor force and we say, wait, there's more people that are going for part-time work. We have a higher percentage holding 2 jobs for economic reasons. The hiring rate is lower. I know everyone's waiting for Friday for the jobs report. I actually think the JOLTS report is the more important report coming out tomorrow. It tells us hiring. It tells us that labor differential, which is actually at a 3-year low. That's a proxy for unemployment, and it looks like unemployment could be moving higher. So I think there's a lot of uncertainties that we get a soft landing. I'm not saying we go full-on recession, but I think we could be, waiting for a larger pullback. Perhaps that's what we do, Brad, go in and buy the dips a little bit. Maybe not a 1 or 2% move. We've been seeing quite a bit of volatility around those levels, but could see a larger pullback.
In past cutting cycles, we've seen tech be one of the beneficiaries. Are you expecting something similar this time around? I mean, especially considering the run-up that we've seen, really driven by so much kind of excitement and exuberance, over-exuberance, if some have called it, for the AI trade right now.
Yes, so tech has had such a strong run. I mean, in our opinion, what we're doing is we're actually trimming those names, as I mentioned a moment ago, and using that for an opportunity to go into other areas. So is tech going to be the leader going forward? I mean, look, AI has a long runway to it. And so I think there will be a lot of beneficiaries of AI over the course of the next few years. Do I think they're going to lead at the end of this year? I think you're going to see a little bit more broadening out in some of those other sectors. We talked about financials being one of our favorite, especially as you see some disinversion of the yield curve and seeing yields maybe move a little bit higher, but continuing a longer trend probably down from here.
Victoria, it's great to see you here. Thanks for making the trip all the way up from Texas,
Thanks,
Lone Star
guys.
State.
It's my pleasure.
We got a little, we got some cool seasonality that's really rolling through right now, early September. So hopefully you appreciate the breeze that we got.
Feels good out there.
We dialed it up just for you. Victoria Fernandez, Chief Market Strategist over at Crossmark Global Investments. Thanks so much.